won't spend too much more time. My name is Harry. I'm from BWB, and we're obviously working on the Capital Hub. And you'll have seen a lot of us in the investment planning process in the CCC at this point. So, obviously excited to be here and excited to be working with you at this point. And I'm actually now going to lead this straight to Frankfurt School to take it from here. Any questions you have, we're going to try and follow. We'll do is leave it in the channel, and we'll follow up directly via email, since there's a lot that needs to be unpacked for the EU taxonomy, and I think we might not be able to get round to all of the questions on this call. So hopefully this will be just more of an informative session, and please do leave any comments as it goes along, and hopefully we can manage the input as it happens. So with that, I will leave it to our colleagues at Frankfurt School to introduce themselves, introduce the topic, and run you through the EU taxonomy.
All right. Hello, everyone. Great to have you all here. This is Jayashree, and I work with the Frankfurt School. I've been working on the Net Zero Cities project for a while. So a lot of your city names sounds and reads familiar. We also have Frederick joining from Frankfurt School, who's the taxonomy expert, the in-house taxonomy expert from Frankfurt School, who would be guiding us through the presentation. Just to give a background, Frankfurt School is based in Frankfurt in Germany. We've been a part of the larger consortium of the Net Zero Cities project. And we are also involved extensively in training, providing executive education and trainings. So taxonomy is a subject that's very dear to Frankfurt School, and we've been doing this for a long time. And we are very happy to introduce the concept of cities through the Net Zero Cities project. Freddie, if we could move further. Just a couple of quick housekeeping measures. Again, a lot of you have done this already. If not, please rename yourself with your name and the city or the organization that you're associated with for easy identification. It'd be great if you're all muted and could only unmute yourself while we're speaking. And if there are any technical difficulties, if you're unable to hear, or if there's any other problem, please do post a message on the chat for the host to take care of the issue. And questions are welcome on the chat box. We're not planning to answer them during the session, but most welcome. The questions are to be on the chat box. And we are hoping to send some comprehensive responses on an appropriate channel post the session, because it's a technical topic. And for all of you to be aware, the session is currently being recorded for future reference and circulation. So with that, we can quickly move on to the next piece. Okay, what are we planning to do with this session today? Like, what are we hoping to cover with the taxonomy? So the idea is to get cities introduced to the concept of taxonomy and decode like what it could mean to cities, at least at the initial levels. That's the overall intention of this webinar. The flow would be a quick background on why or how the EU taxonomy was conceived, following with why is it to align with the taxonomy important, and following what are the regulations and tools available under the taxonomy, and who should be reporting using these tools on the taxonomy, and how to assess. There are certain procedures and processes described within the taxonomy itself. So how do you assess alignment and process with respect to cities and your infrastructure projects? So how can that happen? And what are the exact intersection with cities? Because taxonomy is, again, a code, like a book of multiple processes and topics covered. So what are the exact intersection with cities? We're also going to see a little on that, and use some of the examples from your investment plans to make a more tangible example, and give a very quick summary of all of these towards the end. So that's the planned flow of the session. So, as I said, we wanted to quickly start off with how the taxonomy was conceived initially. Like, what's the intention of creating this taxonomy? Because it's been in play only for the last couple of years. The intention was at least looking at a couple of larger objectives at the European Union level. the European Union has been looking at cutting down greenhouse gas emissions by 55% by 2030 compared to the 1990 levels. We're also looking at cutting down net with no net emissions of greenhouse gases by 2050, and overall resilience built within the EU for tackling climate change by 2050, preserving the natural capital and conservation of natural capital of the European Union, looking at the overall well-being of the citizens, including environmental related risk, health related hazards, and so on, and to build the overall quality of life within the EU. That's largely the goal with which the EU taxonomy was conceived. At least this was the base that gave way into something called the European Union Green Deal, which are a set of policy incentives and policy initiatives that are talking about all of these objectives that I've just pointed out. The idea was to embed all of these objectives into policies to ensure that cities and the European Union could take action on achieving these goals at the end of the day. So these set of policy initiatives are again called the EU Green Deal. But again, these are larger policy initiatives that are supposed to push forward climate action within the EU. How do you monetarily make them happen? Like, where do you source capital? Where are you going to attract the capital from and deploy the capital on? So based on that, to have a complete monetary view on how this could be done, how the EU Green Deal could become a reality, the EU further developed something called the Action Plan on Sustainable Finance, with details out on what are some of the regulations, how capital could be accessed to ensure that we reach the EU Green Deal, the objectives of the EU Green Deal. So there are a lot of work that's happened even before the taxonomy. We have the EU Green Deal, we have the Sustainable Finance Framework, and eventually when all of this is in place, we also needed a regulatory mechanism to check like how much of this is really going to be used well, like how could we report, how could we understand this better, and how could the reporting happen? So there was a framework required for which the EU taxonomy was conceived. So I think EU taxonomy has been an evolving material since start. It's been a couple of years since the introduction of the taxonomy itself, but the taxonomy itself has been evolving year on year, meaning material and content has been updated on a yearly basis from time to time. So it's still evolving material, but the base of the taxonomy is still the Green Deal and the Action Plan on Sustainable Finance, and to overall achieve the goals set by the EU Green Deal. That's where the taxonomy is. The next slide, Spree. So this is, again, broadly a reporting mechanism. So what is the taxonomy? If we want to define it, we could say, like I mentioned, it's a list of economic activities that could be considered environmentally sustainable. There's, say, for example, the NACE codes, which has like a group of environmental activities. Just like that, the EU taxonomy is a definition or a dossier of environmental activities that could be considered sustainable. And as I mentioned, it's a very evolving piece, meaning there have been multiple activities that have been added on regular intervals. So it's again a very evolving piece, and it's a definition or a dossier of economic activities. And what could be the EU taxonomy further? It's a common language. There is no other common mechanism for all of us to adapt, right? Like in case if a city is interested in reporting, or if an investor is intending to compare like two of his investments, there has to be a common framework that could be used to do the same. So EU taxonomy currently is being that common language and a clear definition of what is sustainable within the EU context. And it also has a list of performance criteria, right? Not all of the activities can be 100% sustainable or 100% environmentally viable. So there are also different grading criteria and performance criteria inbuilt within the taxonomy. So if we have to define it, it's just a common language that could be used between the players in the EU of a list of economic activities to define where your investments are, what your activities are, and how sustainable and how environmentally cautious they are. So that's the larger goal of the EU taxonomy. Now, we've seen why the EU taxonomy was conceived and what it has to offer, but why is it important for cities to align? So again, a couple of points. I think a lot of us have been working with citizens, investors, regulatory bodies, and so on and so forth. This material could be great in sort of communicating what the city is doing towards achieving its ESG goals, even to communicate to the citizens if there are citizen initiative like led engagements, or to get in touch with investors, or even for the regulatory bodies. It's a great material to be transparent on where the city is progressing towards its own net zero goals. And it's just not a measure to inform others, but it's also a place to consistently plan your own investments and activities, like to evaluate where the city stands by the city itself, on where is it going to stand and how do we do it, and so on and so forth. Like to even to track our own progress, EU taxonomy is a great material, and alignment with it would be very useful for the cities. And the larger potential, I think the green point here is the financing opportunities associated with EU taxonomy, meaning it has a potential to get in touch with investors, because a lot of investors these days are like, it's been a goal, because investors are also supposed to report under the EU taxonomy on where their investments are and how green are their investments. So when a city does it, it also gives you a lot more interface with the investors in pursuing or in attracting the green capital that's available with the investing community. So that's one thing. And finally, it's a very new concept to the cities. So if any of the cities start reporting on the taxonomy, or if we take it to the next stage, it could be a great starting point for other cities to follow suit, right? So I think that's largely why alignment is important. While we speak about the alignment, EU taxonomy, deploying it, it's just not just one single framework, but there are multiple tools and there are multiple resources under the taxonomy that is utilized to enhance the reporting procedure. So we'd be covering that next. Shreddy, over to you.
Yeah. Thank you, Jashveer, and also welcome from my side. Yeah, as Jashveer just said, we will now have a little closer look into the regulatory framework that was created around the EU taxonomy. As mentioned before, the EU taxonomy is more or less a list of economic activities that could potentially support the achievement of our environmental goals. There was, over the last few years, the European Commission and the EU created a big regulatory framework around that, which is quite complex and for some even confusing. So I hope that we can share a little bit of light into it now. We have two different kinds of regulations around the EU taxonomy. On the one hand, we have the disclosure and reporting regulations. So the idea here is that stakeholders and shareholders should be able to make informed decisions. And so the idea is that they not only need the financial information, but also some sustainability related information. So we have the Corporate Sustainability Reporting Directive here, which is directed towards non-financial companies, so that they have to include some sustainability data in their annual reporting. And here, the definition of what is sustainable is then the EU taxonomy. So the CSRD is then directing to the EU taxonomy. Then we have the Capital Requirements Regulation, which is focusing on financial institutions. So also they have to report on their sustainability activities, and they have to report the share of assets in their portfolio that are aligned with the EU taxonomy. So here again, we see a reference towards the EU taxonomy. And then we have the Sustainable Finance Disclosure Regulation, which is a little bit more complex and also not too important for this presentation now, but for the sake of completeness, it should be mentioned as well. So it requires financial institutions and investors to reference the EU taxonomy when advertising green financial products. So this is only for products that are also advertised as green or EU taxonomy aligned. So this is the disclosure regulations are a common framework under the taxonomy, whereas the other more specific regulations for tools and financial products on the right-hand side are rather independent, but also work in tandem with the EU taxonomy. If we look, for example, at the EU Green Bond Standard, we can see that at the moment there are many standards out there, voluntary standards from different organizations and initiatives, which vary. So they have varying definitions of what is sustainable and also different reporting rules. And this makes it quite difficult for investors to compare green bonds between issuers and between regions. So the EU Green Bond Standard therefore aims to provide a standardized set of criteria and also a common definition of what is green and what is sustainable and what can also be put into a green bond. So green bonds are also relevant for bigger municipalities and cities. For example, the German city of Münster just released recently a green bond, which was quite a success. So this can also play a role in cities and municipalities. So now let's move on to the next one. So now we will zoom in a little bit and see who actually has to report on the EU taxonomy. Again, we have two actor groups like described before. We have the corporates and also the financial institutions. So the CSRD requires corporates to report on sustainability related information. And here there are some thresholds like which companies have to report. So at the moment it's listed companies that have more than 500 employees and also balance sheet higher than 25 million or revenues higher than 50 million. So it's only talking about maybe 10,000 or a little bit more than 10,000 different companies. But over the next few years, the CSRD foresees to include on a progressively basis more and more companies. So then we are talking about maybe 50,000 or even more companies that have to report on sustainability related data in a few years. And it also broadens the scope, not only like who has to report, but also what is to report. So it's more detailed as the former regulation, the NFRD. So corporates have to report on their turnover, their investments, and also their operating expenses that are aligned with taxonomy, with activities that fall under the EU taxonomy. So on the other hand, we have the financial institutions which also have to report on the EU taxonomy. This comes from one string is from the Corporate Sustainability Reporting Directive and therefore also the EU taxonomy regulation, but also the capital requirements regulation. And this requires banks to report on their green asset ratio, like what share of their assets in the portfolio are green according to the EU taxonomy. We can clearly see that municipalities and cities are not explicitly mentioned here. I just wrote including utilities up there for corporates because some big utilities also fall under the CSRD criteria and therefore have to report, and then cities are also involved. But in the need of information, banks will also ask their clients more and more about sustainability related information. And this also applies for cities that apply, for example, for a concessional loan or a commercial loan. So as banks have to report on that, and also corporates, everyone is keen to get more information and more data, and therefore they will also give on the regulatory pressure to others, to their clients, and also to their suppliers and the whole supply chain. So in the end, at the moment, big corporates and financial institutions are required to report, but in the end, they will also put on this pressure to the others. Now, we will look into the taxonomy in more detail, like how is it structured and also how is it applied. Before doing so, I have to introduce two different words. So we have taxonomy eligible, taxonomy aligned. These are terms also used in the regulation. So taxonomy eligible means that this economic activity we are talking about could potentially contribute to the achievement of environmental objectives. Alignment means that this economic activity actually also supports these environmental objectives. So that's also why we broke it down into different steps. So the first one is identify. After that, we will assess if the economic activity also is aligned with the EU taxonomy. Then we have a social check and also something about reporting. So here, the European Commission defined 6 major environmental objectives in the EU taxonomy. So it's not only about climate change, it covers more and therefore is also a more comprehensive system. So we have climate change mitigation, of course, which is about reducing greenhouse gas emissions. Then we have climate change adaptation, which is about minimizing the unavoidable adverse impacts of climate change. Then we have sustainable use and protection of water and marine resources, which is also about adverse effects of urban and industrial wastewater discharges. We have circular economy, so establishing a system that extends the life cycle of products. So keywords here, recycling, repairing, sharing. Then we have the 5th environmental objective, pollution prevention and control. So eliminating pollution in air, water, and soil. And then finally, biodiversity and ecosystems to import and the importance of, which show the importance of preserving and restoring healthy ecosystems. Yeah, so these are the 6 environmental objectives, and each economic activity to be taxonomy aligned or taxonomy eligible has to support one of those objectives. And as the EU taxonomy is only a regulation that sets out the whole concept of this classification system, there are even more delegated acts that come in addition to the EU taxonomy regulation. So the European Commission started off with the Climate Delegated Act, which set out criteria for economic activities in the area of climate change mitigation and adaptation. So they started off with this because also data availability is best in those 2 environmental objectives. But then the remaining environmental objectives followed last year. So in the Delegated Act, actually the content of the EU taxonomy is to be found. The complementary Climate Delegated Act then was in addition to the first one, because there was the big discussion about whether energy generation from nuclear and gas should also be included into this sustainable economic activity list. And yes, finally they decided that this is actually true. So they added this complementary Climate Delegated Act. Then another one on disclosure and reporting, so that this gives guidance how it is actually to report. And then the Environmental Delegated Act published last year, which sets out the criteria for the remaining 4 environmental objectives. So still we are in the eligibility check phase. So what does a company actually need to do to see if it is taxonomy eligible? So it's economic activities. First, you would start and define what kind of economic activities am I performing in my company. There you can also use then the NACE codes that are available from online, which is a classification system of all different economic activities that are out there. So first you would see what am I doing, and then you can open the EU Taxonomy Navigator, a tool that is provided by the European Commission that helps you to follow the structure of the EU taxonomy. And then you can see if your economic activity is in the EU taxonomy list. If it is in there, then it means your activity is taxonomy eligible and potentially taxonomy aligned. Here we can see that there are 6 different environmental objectives, and you can see to which one the economic activity is supporting. We have also transitional activities and enabling one. Enabling means the economic activity itself is not supporting the goal of an environmental goal, but it supports another activity that supports the goal. So it is also needed for the transition. And then there are transitional activities, which are economic activities where no environmentally friendly alternative is out there at the moment, but still it is needed for the transition. So if your activity is in the list, then it is also eligible. Then we would go on to the next step and see if it is actually also aligned. In other words, we look if it makes a substantial contribution to at least one of the environmental objectives, and if it is doing any harm to the other remaining 5 environmental objectives. So this is basically the idea of the EU taxonomy. It has to support one, and it's not allowed to doing harm to any of the remaining 5. And then in the taxonomy navigator, you can then also drill down a little bit into your economic activity and see the technical screening criteria. So this is actually quite detailed and also very technical. In energy production, for example, it is CO2 emissions per kilowatt hour, for example. Here we look at energy efficiency equipment for buildings. Here we can see some figures for how energy efficient windows have to be, doors, external wall systems, roofing systems, and so on. If you fulfill this substantial contribution criteria, we have to move on to the next one to check the do no significant harm criteria. Again, 5 criteria for 5 different environmental objectives. Yeah. So these were the 2 first steps. We saw now the first 2 steps were only looking at this matter from an environmental perspective, but there is even more. The EU taxonomy tries to be very comprehensive and also includes social aspects in there. So you have to also ensure that you follow global guidelines when it comes to social aspects. And then you also have to report. So this is actually then quite a well-rounded approach that the EU taxonomy provides. Here we can quickly go through it, but for the sake of completeness, we will just show it. So check the compliance with minimum safeguards. Here we have the UN Guiding Principle on Business and Human Rights, and also the OECD guidelines, which tackle topics like human rights, labor, child labor, bribery and corruption, taxation, fair competition. So you have to comply with those guidelines and principles as well. And then you also have to report on it. Here, I've chosen an example from a German energy production company, E.ON, how they then report on the EU taxonomy. Of course, a lot of work has been gone into this assessment. So these are the very simplistic figures in the end. So what share of investments goes into taxonomy eligible and taxonomy aligned products or activities, and also for revenues and operational expenses. Here we can see that only 18% of revenue comes from taxonomy aligned activities, but we can also see that more than 2/3 are two-thirds are going into taxonomy aligned activities like the investments. So for a stakeholder or shareholder, this can be quite important information to see how active the company is in regards to sustainability. So these are the 4 major steps. And now I will again hand over to my colleague Jeshri.
Thank you. Maybe I'll take a moment to also summarize, because that was a lot of information covered in a short span. We looked at a couple of things, including what are the different disclosures and tools that are used under the EU taxonomy. It could be the Corporate Sustainability Reporting Directive. It could be the Capital Requirements Regulation. There are other tools like the EU Green Bond Standard or the EU Eco-Label. So all of this has to come into play. Like the taxonomy reporting itself is an amalgamation of the disclosures and the tools handled together. So we saw that, and we also looked into the specifics of what it could mean to corporate entities, meaning the non-financial entities that are reporting under the EU taxonomy, as well as the financial institutions. Who should report, who should not report, what are the regulations, and so on and so forth. Currently, I think the EU taxonomy reporting is set up, they have a benchmark set. If you are at a certain level, then the reporting becomes mandatory. Most of the cities might not fall into that category. But again, it's a very tricky space considering that utilities are distributed among different companies. There could be one company that could have more than 500 employees or generate a particular benchmark revenue as per the EU taxonomy. So it's a very tricky space for cities. And this has to be also evaluated at a city-to-city basis if there is a mandatory reporting required. But otherwise, like Frederick mentioned, cities reporting are largely voluntary at this point. So that's something that we saw, and we closely also took a look at the 4 steps of assessing the alignment with the taxonomy, identifying the eligible activities, how to assess the eligible activities under the taxonomy, under the 6 different criteria, the environmental objectives, and how do we apply the global standards? Because again, like Frederick mentioned, EU taxonomy has a very well-rounded approach. The idea is to have promote equality, social equality, environmental equality, and the overall quality of life itself. So it's not just going to look at the environmental objectives, but also going to capture the social objectives, the economic objectives. So that's the entire concept of the taxonomy. So we do that on the 3rd step, and then we report. Now, what could this mean to cities? Like, how can cities do that? We saw a template approach on how this could be done. But with respect to the cities, we've picked up a couple of, I mean, on the screen are some of the snapshots from a couple of investment plans, or some of the more common projects that we've figured from the investment plans of the cities that have submitted their IPs. So if you look at it, we have, for example, alternate energy has been an area of interest for cities. Expansion of walking and cycling infrastructure has been an interest area, or waste cycling has been an interest area. So as I mentioned, EU taxonomy is a very evolving material. A couple of years back, there probably wasn't all of these covered. Currently, I mean, it is quite extensive. So we have, say, for example, electricity, gas, information communication technology, water, sewerage, waste, building construction, transport. Like, there are a lot covered under the taxonomy, but that doesn't mean all of the city projects would find a place within the taxonomy, because it's an evolving material. Just because the city projects do not find a place within the taxonomy also doesn't mean that they are not environmentally viable. It's only because the taxonomy is an evolving product, and it'll take a couple of years to stabilize. And in fact, the update of the taxonomy would be happening at regular intervals to ensure that it's more comprehensive as possible. So the idea is cities currently report voluntarily. We wouldn't know when this could be made mandatory to all of these, maybe to cities or municipalities, or when the regulations could change. Maybe the benchmark index could come a little lower, and to ensure more companies and more utilities start reporting under the EU taxonomy. But this is what we're looking at. In fact, going a step deeper into the municipalities, next slide, Freddie. There are a couple of ways where utilities or infrastructure are currently being implemented and deployed by the municipalities, right? And how do we align the line items within the IP? As a city, which is great, and project specific, like how do we look at and evaluate if a project is going to be taxonomy eligible or not? There are a couple of ways currently, from our understanding within the EU, how city infrastructure projects are being deployed or implemented. They could be, it could be a built operate transfer mechanism, or built transfer operate mechanism. Maybe the operations are being leased out to a third party. It could be tendering, or it could be direct municipal investments where the municipality is involved in the implementation of the particular infrastructure as well. Or it could be community-led initiatives or joint ventures or PPPs. It could be multiple things. What we've seen in some cases is that city gets to plan, procure, implement, and maintain, right? Like, this is some cases, and depending on projects and depending on multiple factors with respect to that particular project and the city, they could, we've seen some cities plan, procure, implement, and maintain. In most cases, we've understood that city as an entity plans the investment, but the utility companies takes over, or the third party agency through tendering takes over the implementation part. This has been our observation in most cases. And in a few cases, the operations are alone leased out, while the city maintains ownership of the infrastructure. And like mentioned, all of this would depend project to project and city to city. But these are some of the things that we've looked at. And in fact, we've picked up 2 more tangible areas of interest to cities to dive deeper into how the taxonomy could be applied to each of these areas, which Frederick would take over from the next piece. Yeah,
thank you. Yeah, then I would suggest we look at 2 cases to see how the taxonomy actually works. Like previously, it was more a description, rather theoretical. Now we will look how it is actually applied. So let's assume there is a road construction infrastructure project. So a road between 2 city districts or neighborhoods is to be built. So we could start again with step 1, identify if the project is taxonomy eligible. We would then go to the taxonomy navigator and see if we can find road construction in there or something similar. So we can actually find something under the sector or industry of transport. It's called infrastructure that enables low carbon road transport and public transport. That's then the activity. There's also a definition to it. I also noted here where to find it. So it's part of the Climate Delegated Act. The environmental objective it supports is climate change mitigation. It's an enabling activity. Of course, constructing a road itself is not reducing greenhouse gases, but it could support the use of net zero vehicles. So the activity could be taxonomy aligned. It definitely is taxonomy eligible. So we would then go to the next step and see if it actually contributes. So for this economic activity, there are 2 different criteria. The first one is more or less an exclusion criteria. So if the infrastructure project is completely dedicated to the transport or storage of fossil fuels, then it's directly disqualified. But to be honest, this will only be the case for very few roads or roads. For example, from a coal mine to a motorway, or for example, from a city district to a coal-fired plant, a dedicated road where only fossil fuels are transported, for example. But so this won't be the case many times, but that's the first criteria. And then we have one more which has 3 options. So an activity is deemed to also fulfill the substantial contribution criteria if the road is intended for the use of emission-free vehicles. So this can be done by, for example, also including electric charging points, electricity grid connection upgrades, hydrogen fueling stations, or electric road systems. So that's at least mentioned in the criteria, but there's also room for interpretation. So in other words, if the infrastructure has implemented any incentives for the circulation of zero emission vehicles, then it's deemed to meet the criteria. Then you only have to have a solid explanation for it. You could also argument, for example, if there's a park and ride car park next to this road and it's also connected, that this also enables low carbon transport. Second option, if the road is used for the transfer of goods between modes, like railway stations, structures for loading or uploading. And the third one is that it supports the public transportation. So it has, for example, bus lines, a tramway, or it's used by trolley buses. So not exclusively. So on the right-hand side, we can see then a decision tree, how you would actually do the assessment. So first ask if the road is used for storage or transport of fossil fuels. So if that's not the case, then we can go on to the next criteria and see does it support the use of CO2-free vehicles, or if it's also supporting public transportation. If that's the case, then it is directly taxonomy aligned. So that we still have to check the do not significant harm criteria, but the first step is done, so it fulfills the substantial contribution criteria. So next slide. Then we have to check if that's the case. So we assume we fulfill the substantial contribution criteria. Then we go to the do not significant harm criteria, which is set out for the remaining 5 environmental objectives. In that case here, for example, let's look at climate adaptation. We first have to check if there are any physical risks related to this project. If you do not identify any risks, then you can say you are not doing any harm to climate change adaptation. If there are risks, then you have to make a vulnerability assessment and also provide some solutions for these risks. Then you can say, I fulfilled the do not significant harm criteria. For marine and water protection, you have to have a water protection and use management plan, which is also regulated in some other European regulations. When it comes to circular economy, you have to ensure that 70% of construction and demolition waste is prepared for reuse or recycling. And pollution prevention, you have to check that neighbors are not disturbed by any noise that's coming from the construction site. And for biodiversity, you have to, for example, to make an assessment, an environmental impact assessment in accordance with a directive from the EU. So it looks a lot, and it's also quite complex and detailed. But to be honest, like for bigger projects, like a road construction project, there are many regulations out there which anyway ask project developers to do those assessments, at least in parts. So it is a lot, but most of it should already been there, but then you have just to prepare it for the reporting. Of course, also there's more assessment and plans to be to create, but at least that's the do not significant harm part. And if you have met all criteria, then this economic activity is taxonomy aligned. Then you have to check on the social safeguards. So that's what I mentioned before with the principles and guidelines. And then you have to report on it. And this is just an example, really. Do not take it word by word, but it's an example. So let's assume a company has invested 100 million. 50% are going into this road that I just described between two neighborhoods, and we say it's taxonomy aligned after we met all criteria. And the rest, like the remaining 50%, were used for a road between a coal-fired plant and a city center. Then the reporting would say 50% alignment share of our investments with the EU taxonomy. So that's super simple. Of course, it's way more than that, but this was just to give an example. And then the next case study, I think we can go through it quite quickly, just to show that the procedure is always the same. The renewal of sewage systems. There's also an economic activity under the sector water supply, sewage, waste management, and remediation. The activity is called renewal of wastewater collection and treatment. There's again also a definition to that. So the project would be taxonomy eligible already. Then we would go to the substantial contribution assessment. We can see that this economic activity can support two different environmental objectives. You have then to choose one of those for reporting reasons. And for example, for climate change mitigation, the criteria would be that the renewal of this sewage system is decreasing the average energy consumption by 20%. So that's the criteria. If you do not fulfill it, then it's only eligible and not aligned, which is not a problem in reporting. But at least that's the criteria. And then we can go to do not significant harm assessment. You can see it's quite similar. For example, for marine and water protection, we have again the same water protection and use management plan again. And then we have also criteria on pollution and biodiversity. If all these criteria are also met, then it's aligned. And then we can again check on the minimum social safeguards and then report on it. So I hope this was a little bit more explicit than the first theoretical part of the presentation.
Yeah, if I can just add a couple of bits to it. Again, in an attempt to paraphrase these things, the EU taxonomy compass lays out a very pretty straightforward picture on how the assessment and alignment should be made with respect to infrastructure activities. I think the bottom line of it is to assess how there is no significant harm being done to any of the objectives, and those assessments could be well proven only through, say, environmental impact assessment or a water protection use management plan or a climate vulnerability assessment based on the project requirements and needs. Each of these assignments and assessments should be done at different stages to ensure that the alignment is completely right. So that's what the EU taxonomy largely projects. While it's a framework, the specifics could be assessed only by particular assessments that could be carried out by the cities for the particular project. So that's something. And in fact, I would like to refer back to one of my earlier slides where we spoke about multiple possibilities of implementing a project from a city's angle. So which says that city is the responsible entity for this reporting should happen. It could be that the project is being contracted out to a third party or a utility company taking over the project and so on. But end of the day, from an investor's perspective, it's about how the city is looking at these things, how well-rounded, how well the city is planning these things. So I think the city is at the helm of ownership and ensure that these assessments gets done. And which takes me to the next slide, which is a very important perspective, is the takeaways for the larger picture for the city, right? Which is what does it mean in terms of framework and compliance? What does EU taxonomy usually like overall? Like we have a reporting mechanism here, we do the assessment, but what do we expect in the larger picture with respect to cities? So it is currently EU taxonomy is not the only source of truth or the only sort of reporting mechanism that's being preferred by the investors. It's currently still developing. But more likely there is there is a high chance that there could be a broader adoption by investors going further. So compliance with the taxonomy does not guarantee any project success or any bankability, but it's a great first step to get in touch with investors, to be on their radar, to ensure that to inform the world and to inform the investor, to inform the citizens, and to even keep evaluating our own selves as cities on where we stand. So it's a great framework mechanism and compliance mechanism. And it's a holistic approach considering EU taxonomy is not, again, the only source of truth. While we look at, we've spoken with commercial bankers, multilaterals, and so on and so forth. EU taxonomy is a great tool again, but it's no replacement for a comprehensive transition and risk management plan that should be proposed by the city. I think on the whole, cities should look at EU taxonomy as one strong building block, but it's not going to just be one column that would buttress the entire thing that the cities are supposed to do. It's one good building block, but comprehensive transition and risk management mechanisms are still being welcomed by investors, and that's something that cannot be replaced. And earlier adoption and integration. Currently, the EU taxonomy is in its very initial phases, but doing it at this point gives a lot of space for the cities to understand the process and to do it, to ensure that reporting can happen much better. We could work at the city level on how the data is collected with respect to economic activities, or how do we present to ensure accurate reporting happens at different levels. Because once it's going to be mandatory in the future, there are high chances, there is a lot of potential for the EU taxonomy to be mandatory in the future for cities or municipalities. It's a great place to start now to ensure that we achieve the accuracy when there is a mandatory reporting required in the future. So those are some high-level points, and we'd like to close with a couple of disclaimers that the entire presentation was for just informational purposes. While it can be a guiding material, please do not make any assessments based on this material only. It could definitely be a great starting point, but just to have that caveat that no assessment should be made by the city slowly just on this material. So with that, we wind up. And I see a couple of messages on the chat. So maybe since there are very few, I could also take it right away. For Nicholas, should ETS2 be stored in the tool branch of the chart? Well, ETS2 is largely an emission tracking system. It's not really a tool. It's an emission tracking system that would be aligned with the taxonomy, but not necessarily a tool. It's also a reporting and a trading and a tracking system. It has to be in line with the EU taxonomy, but I wouldn't really qualify that as a tool. And are municipalities considered as corporates or financial institutions regarding the EU taxonomy? Well, they are very much corporates under the corporate disclosures. In fact, cities do not fall under corporates. There's no special categories that we could tag the cities to. But say, for example, a utility company that could be looking at a couple of infrastructure at the city level, they are definitely tagged as corporates. So the reporting that applies for a corporate would also apply for the utility company or city from that angle. And there is also a message from Lemesos that says, I do not understand why the taxonomy is environmentally negative actions lead simply to non-alignment instead of actually subtracting from the alignment of positive actions. While, sorry, would you want to take that, Freddie?
Yeah, maybe a quick thing to this question. There is always a discussion about this. How ambitious should the EU taxonomy be? Like, should we make the criteria in a way that most companies can comply with it, and therefore the taxonomy shares are higher? Or do we say, no, it has to be a scientific and it has to have fixed criteria, which is also quite ambitious, and therefore the taxonomy aligned shares and taxonomy eligible shares are then a little bit lower. So there's a discussion about this already. So the decision that was taken is that it's quite strict, which is also good. But of course, I see the point of this question, yeah.
Okay, we have one more question, which is how large is the documentation and construction case for road investment? Are there any helping forms or documents to report all the investigations and studies? Currently, there are no forms that are, or there's no guiding material apart from the taxonomy. The taxonomy compass that's available online is a great tool. I'd request all of you to run through and maybe take a quick scan at that. That also gives a very good basis, and it's a pretty straightforward tool. But other than that, we don't have a lot of guiding mechanisms. I would say all of the guidance materials that's available online is being interpreted by someone. So whatever is available on the EU website or the EU taxonomy website is straightforward material, which gives you the updated information that we would need to assess projects or align the projects with the EU taxonomy. So I prefer that. In fact, one last thought to just close off is that now that cities are the entities that are that takes ownership of reporting under the taxonomy, it's also high time that we think about how does this reporting happen? Should we look at it at a project perspective? Rather, there are also a lot of arguments and discussions going around how this could be integrated into the budget planning and the budget cycle of the cities itself. If we could do it at the earlier stage, once we start or once we plan the budget, and if we could also see at that stage itself on what are the things or how are these activities EU taxonomy aligned, what are the different assessments that has to be carried out to ensure alignment of the EU taxonomy. All of this could be done maybe at the start or the beginning of the financial year through budget planning. So that's a thought that I'll leave with the cities. This is an ongoing debate that's like currently being discussed in a lot of places. Harry, would you want to add any closing notes?
Yeah, good point. I mean, we're very close. Yeah, in fact, we're right at the end of our time. So more than anything, just thanks for everyone for joining. Do send any follow-ups or any feedback, any comments, or because this is the last of the ones that we have planned, please do also send some suggestions of things that you would love to see more on. I mean, things that we're looking at, for instance, are how to work effectively with private sector, how to implement PPPs, what are the sort of financial implications of working with a PPA, or even along the lines of looking at specific financial focus for different sectors within the Climate City contract. So, I mean, right now, we're still focusing up for the launch of the Capital Hub, which will be official in Valencia next week. So any of you in Valencia, do feel free to come up to us and say hello. Otherwise, again, thanks very much for joining.
Thank you so much, everyone.
Bye, everyone.